Well, Tesla. Well, Tesla. Well, Tesla. I would say it was a great call, fantastic call for the most part, Bradford. But I ended up being really, really confused, and I'm very hopeful that you will be able to straighten me out on Good News Thursday. As always, thank you so much for co-hosting. What did the Teslanaires tell you today after all that yesterday? Did you hear from a lot of your customers today?
Yeah, there's several that are interested in potentially adding around these levels. We're going to hold off a day or so and see what happens. But yeah, I did hear from them. I also heard from some diversified clients who wanted to sell Tesla. Um,
Wow.
so like people are losing patience, especially people who aren't like as into studying Tesla. We
That's
don't necessarily roll over and just let them do it, but
that's good.
that's what we're seeing.
Selling at the bottom has never been exactly the suggestion that makes people a lot of money. I could be wrong, but okay, I've got four quandaries. I want you to help me with these four quandaries. I think they're very, very critical to the story going forward. So maybe you don't, maybe you do, but let's see what you say here. My understanding is, I know this for a fact, you are the community's expert on battery storage. And in the earnings call, Tesla said they will be fully ramped, all 40 gigawatt hours, 10,000 units, be fully ramped later this year. They didn't give exact timing, but later this year. Now, these units sell for about $1.5 million each on average. Then Tesla makes money on top of that from design, from installation, from management, et cetera. But we'll just go with a $1.5 million per 10,000 units for now. So they also sell a bunch of power walls. I'm assuming those are part of the energy storage number on the profit and loss, but those would be at much higher levels in terms of the kilowatt hour pricing, right?
Yeah, dollars per kilowatt hour is a lot higher for those for sure.
Right. So, but just for giggles, would you think that the run rate for all of energy could be somewhere around 15 billion by the end of 2024?
Yeah, if they actually get to their capacity and produce to 100% for that capacity, which would be a little unheard of. Most factories don't run at 100%. I'd say Giga Shanghai would be one of the few exceptions of that. It was a little disappointing to hear them say that the capacity is 20 and going to 40 by the end of this year. Tesla came out October of 2022, so 15 months ago, and said their capacity at Lathrop was 40 gigawatt hours. But we have acknowledgement of a second final assembly line. I've been talking on your channel and others about a second door that they're opening up in the factory, and we've seen the addition of extra straddle loaders, those red things that pick up the super heavy mega packs and load them onto the trucks.
Yeah, so I'm going to be the optimist here. I'm going to say they just weren't ready to announce it yet, Bradford. So
let's go along with your assumption for now and see where the napkin math takes us.
All right, so that would be around $15 billion a run rate by the end of the year. But they would have substantially a great deal of that later this year. So profits 25%. Okay with that one? I think you've suggested it might be higher, but would 25% satisfy you?
Yeah, I think that's good.
All right, so that's close to $4 billion a year for round numbers. It was really like 3.75 or something, but let's call it 4 billion. Because there is these other items that are on top of it, the power walls and the installation. Now, of course, we have the announcement of the other 10,000 unit factory for Shanghai. That is also probably going to be making product certainly by 2025. Can we assume that we'll be manufacturing by 2025?
Yeah, I'd say they'd be they should be like fully ramped by the end of 2025 for
All
sure.
right. Okay. Now, have you seen a single analyst, besides maybe you, who's got a 1.25 billion per quarter in their projection for Tesla Energy starting in Q4, and some kind of ramp from the current 500 million to the 1.25 during quarters 1, 2, and 3 of this year? I mean, why isn't anybody putting that in their numbers?
I don't know. It's probably the most predictable piece of Tesla's business now. On their latest call, Tesla refused to even do like a projection on how many units they'll do this year.
Right.
So maybe they're not sure. But like this mega pack business can be lumpy. There can be very large projects. There was a one that Tesla announced where it's essentially 500 mega packs.
Yeah.
So it's like, it's huge, or maybe it's like 250, where is a terawatt hour or something like that. It's just insane, like how big it is, or maybe it's a gigawatt hour, sorry.
Yeah, yeah, gigawatt.
But it's like, yeah.
So we're going from 1.2 billion this year in profit to something like 4 billion in profit next year, and then to 8 billion in profit the year after that, and nobody's got it in there. So I'm just gonna, for this
And
part,
8 billion in profit divided by like the number of diluted shares would be about like $2.2 a share.
yeah.
And people are projecting now that Tesla's going to make $3 a share
Right.
this year. So
Yeah.
I'm stealing your thunder a little bit, but
You are stealing my thunder, and I do
Yeah.
look at it. Was looking at it only a slightly different way. I'm saying, okay, that's 3 billion in profit that nobody's figuring in, and it's a company that did less than 11 billion total. So
yeah.
almost 30% number that nobody is figuring in. Well, all right, so we agree on that one. Let's try quandary number 2.
Mhm.
The U.S. government passed this law. It says they're willing to pay $35 a kilowatt hour for every kilowatt hour of BEV battery production made in the United States, in a United States factory. Then on top of that, they said they'd be willing to pay $10 a kilowatt for putting that battery into a pack. Have I got it right so far?
Yeah. I'm a little unsure if they have to be in BEVs.
Oh, well, I think they have to be lithium. It's that type of battery. Okay. It has to be a
Yeah.
lithium ion battery designed to do, I don't know, BEVs, or it can go into energy storage.
Yeah.
Any of those applications. Yes, yes,
Yep.
yes. All right. So $45 a kilowatt hour.
Yep.
So I Googled this because I didn't want to get it wrong. Google told me that there is 1 million kilowatt hours in a gigawatt hour. Is that,
Yeah.
okay. So if Tesla makes 1 gigawatt hour of batteries and puts them into a pack, they get a $45 million subsidy for doing that. Is my math good so far?
Yes.
Okay. Now Tesla says that they have one line at Austin fully going. It's fully operational. They've switched over to the new form factor, or the new chemistry for the Cybertruck. And that line is capable of producing 25 gigawatts, right?
Right.
Okay. They also say that they've started the second line, and they're getting that one ramped up, and lines 3 and 4 are currently being certified. And they suggested that all 4 would be operational this year. And in fact, they're building 4 more that should be beginning to ramp by the end of the year. Is all of that what you understand?
My understanding was there were 2 lines and that they were adding 4. So I was thinking it was 6.
No, it's 4 and 4. I know this for that part. I know for a fact.
All right.
Okay. So and we can go back and look at the transcript later, but that's one line fully operational, second line starting to ramp, third and fourth lines are being certified.
Okay.
All right. So anyway, that would get them to 100 gigawatt hours by the end of the year, but sometime, probably closer to the middle 2/3 of the way through the year, they should be at their full 100 gigawatts run rate.
Mhm.
Now, they won't get paid for that full 100 gigawatts this year because they'll be ramping up. So we have a ramp up here. But if they got the whole thing at 100 gigawatts at 40 times 45, it would be $4.5 billion, right?
Just 4.5 billion.
That's all. But, but they're only in the process of getting there. So I'm going to say this year, they're only going to earn 2.25 billion of that 4.5 this year, but then they're going to ramp the second one next year. So they're probably going to be at more like 7 billion or something like that next year. And then 9 billion. Do you know anybody this is now, by the way, it goes to cost of goods. So it's not something that's going to be top line. It's not going to be a second note someplace that they're going to put in. It comes off of cost of goods because it's reducing the cost of the battery. And they did put it in their notes this time, telling people that we now have this IRA that's coming part of cost of goods. But do you know anybody that's figuring $2.2 billion this year coming off of cost of goods?
So they said it's off of cost of goods and not
Yes.
taxes paid.
Yes.
Okay.
Yeah.
Yeah. I don't know anyone who does. Yeah, I'm not quite there with you on the timing, like how much it'll be this year. But like, yeah, fully scaled, your math makes sense to me. And yeah, so once they got to 100 gigawatt hours, provided the IRA was still in place and
Yes.
that it didn't get repealed, yeah, it'd be 4.5 billion, and that's pretty meaningful.
Pretty meaningful. So I'm just going to go
That's
with
a lot of that's a lot of gravy.
a lot of gravy. So I'm just going to go with my 2.2 billion because I've really worked on this hard. I've talked to lots of other people about the current status of things. And even based on the call, they believe they're going to be fully ramped later this year. So I think half of it for this year. Oh, by the way, there's more batteries being made in Cato Road, so they might get some of those. They've also going to get some money out of the $10 for putting the Panasonic batteries into packs. So they're going to get some $10 is there. So I'm just going to go with 2.2 for the purposes of this little experiment. Does that work? All right. Okay. Quandary number 3. I heard various executives in the call say that the cost of goods reduction opportunities in 2024, including changes in design, capture of commodity drops that were not yet captured in 2023, and battery prices dropping like crazy, that they would see some additional drops in cost of goods this year. Last year, the cost of goods dropped 9%, right? Jeff Lutz said that was unbelievable. That was just unreal. It was shocking to him. They're also going to have some savings, maybe in doing their own refined lithium. They're also going to be making their own batteries, so that's going to reduce some of their costs. I asked Jeff Lutz on X just a little while ago, what did he think the total cost of goods savings might be this year? He said another 8 to 10%. That's phenomenal. So from the purposes of this little experiment, I'm going to say 3%. And Elon said that every 1% was $1 billion, right? That's what he said on the call. So there's $3 billion coming out of cost of goods. If they don't pass that along in lower costs, lower selling price, it just drops to the bottom line, right?
Right.
Is there anything wrong with my math here?
Not with your hypothetical, no.
Okay.
We're a little dubious. We think, you know, prices, there might be some more price declines.
Yes, there could be. Yeah.
Yeah, but let's just go along with this. I'm hanging in here with you.
Okay, because they did drop the prices last year, and so that ate up more than even all of the for the total year. It ate up more than their cost of goods savings.
Yeah.
But it was pretty remarkable that there was a 9% drop, according to Jeff Lutz.
Yeah.
All right. Quandary number 4,
It's,
the
it
last.
is a big deal.
It
Yeah.
is a big deal. By the way, I have to think that if I'm a manufacturer, I'm with General Motors or Ford or Toyota, and I see that they saved 9% last year, and I look at all the savings they could potentially have this year, I got to be shaking in my boots. It's not normal for auto companies to save 9% in cost
Yeah.
of goods. Yeah. All right, quandary number 4. Now, possibly he's the most conservative of all the analysts out there. Try Tesla-like. Would you think?
Mhm.
Yeah.
Yeah.
He's modeling 2,070,000 cars next year, cars and trucks.
Mhm.
That's an increase of about 13%. You're going to have to take my word for it. You get your calculator out,
Yeah,
but
sounds about right.
it's not 13%. So assuming the same margins, because we've already done the margin thing, right? And assuming the same ASPs, average selling price, because that obviously could change everything. But for the moment, we'll just assume the same ASP. A 13% increase in automotive profits would follow from a 30% increase in automotive sales.
13, yep.
Okay,
Mhm.
all right. So roughly last year, 16 billion automotive profits. 113% of that is 18 billion. So that's an increase of 2 billion in automotive profits just from the increase in volume.
Right.
All right. Any thoughts on that? Anything to add, subtract, or?
No, I'm following along. This is good.
Okay. All right. So we have 3 billion from energy, 2.2 billion from IRA, 3 billion from cost of goods, and 2 billion from a conservative increase in sales. We're not going to check out overhead and all the rest for this particular little experiment. This would roughly double current profits.
Yeah.
Well, if I did everything right, then we're in for a big surprise this year.
That would definitely be a shock to Wall Street and the public if that happened. Right now they're projecting no growth in
No
profit
growth.
for
No growth in profit.
Tesla.
Right.
And the market's like bad news Thursday for sure.
Yeah. So I don't know, Brad, I wanted you to go through this with me because I consider you to be someone who understands financials and understands profit and loss and, really can take a hard look at these questions that I'm raising. I mean, I've been doing this my whole life. I've owned companies since I was 22 and I'm now really old. And I've been doing my own company spreadsheets for all this time. And I don't think I'm missing anything here. I don't think I'm messing up, but I could be.
Part of it is we're already getting profits from the energy side.
Yeah,
So you need to do a bit of an incremental profit.
I did. It was 1.5. Yeah,
Incremental.
1.3 to whatever we decided up there.
Okay.
Yeah, I subtracted that. Yeah.
Okay. All right. All right. Oh, okay. That's good. That's good. Just checking your math.
That's good.
Yeah, I don't think the 4680 is going to ramp as quickly as you think. And I'd be concerned about some more price cuts. I'm wondering like how much latitude I'll call it the advertising team. Heresy, I know, but
Yeah, yeah.
the advertising team, I wonder how much leeway they have. They've had some good experiments. They talked about a thing they had in Texas that got 10 million views and 500,000 new visitors to the Tesla website.
Yeah, yeah.
I'm wondering like how many booked a test drive. That would have been interesting to
Here
hear
some
that.
more metrics.
Um, I'm curious like how much they continue to grow that and experiment. That could help offset any further price cuts.
Yeah, yeah.
But it seemed like they were kind of cautious around the issue on the call.
Well, and the
Uh,
CFO said, well, we don't want to spend too much in that category.
yeah. You don't want it as a crutch. You don't want it instead of like making your product better. But
Yeah.
Tesla's a large company. They can walk and chew gum at the same time. They can
But
make the product better and advertise and market. I think they're doing a great job with videos on X, and today you even had a post from investor relations, or yesterday you did,
Yeah.
on the main Tesla account, which that hasn't happened in a long time, where the subject was about investor relations. So yeah, you could see some pickup. I don't think it's going to be quite what you're thinking.
Hey, if you
But
cut it in
it
half,
could definitely be better.
if you cut all of it in half, it's still 4.5 billion. I mean, we're not talking about little money here.
Yeah.
Anyway,
Yeah.
it'll be curious. I'm going to ask more people. I want to get, I want to keep asking people until somebody goes, well, yeah, this should be in people's spreadsheets. Okay, let's move on. Gary Black, we know Gary Black well. He says, normally when a company doesn't guide after previously providing guidance, it's a bad sign. Here with Zach gone, I bet Elon decided he didn't want to be beholden to Wall Street guidance anymore. Not because he's negative about full year 24, but likely because most CEOs I know would rather not provide guidance. I believe Tesla can easily do 2,150,000 deliveries in 2024, a 19% increase. Wall Street's at 2.118. He says, especially given the 7,500 off invoice rebate, the M3 refresh, the CT halo effect, all the things that Gary always talks about. And he says, note also the installed capacity of 2.225 plus the CT 3.225 roughly, I think. So what do you think? Lots of CEOs and lots of folks say you should never provide guidance. I think Apple doesn't provide guidance anymore. What do you think about the decision not to provide guidance? What do you think about the reasons? Do you have any thoughts?
I think it's led to the drop today
No, I think that
in
too.
the stock. Yeah, typically when companies pull their guidance, then the stock reacts pretty negatively. And maybe Tesla doesn't know what they're fully going to sell. And maybe they just don't want to say, but I think it led to the drop, and it was the only thing that Tesla was providing before. Like, most companies will provide some kind of estimate for full year earnings. They'll provide some estimate for revenues and some other things like that, profit margin as
Right.
well.
Mm-hmm.
And the only thing Tesla was providing was units. And this might be a reason why Wall Street kind of hates Tesla, because Tesla's not going to tell them everything to fill out their spreadsheet.
Yeah, I hear you. I hear you. Well, and how do you feel about, what do you think units could be next year? Have you guys figured that in? Have you got your own number so far on units for next year?
I'll answer in a different way. So previously, I thought that Tesla would have a very hard time growing by 30% this year, and that would have been like 2.36 million. And
Right.
I said this 9 months, no, like 6 months ago in the summer.
Okay.
And I got a lot of pushback from people. Now suddenly we're at 2.1. That's kind of crazy. And like a bit disappointing, to be honest. I don't think it's going to be as bad as 2.1.
Okay.
I don't think so.
But
It's just a strange time. Like the Model 3 car, it's better than a BMW 3 Series. It's better than an Audi A4. It's better than a Mercedes C-Class.
better than a Honda Accord.
It's priced for less, but still, like, these other brands are selling their cars, and
Yeah.
occasionally Tesla's having to cut price. And yeah, it's just an odd time. And I'm glad you're bringing us some of the good news. Is a different way to look at it.
Okay. So anyway, you're not gonna reconfirm your 2.36 though.
Yeah, I don't think they do 2.36.
Okay. I happen to
Um,
be at 2.35, by the way, although I'm contemplating moving mine up.
there you go. I like it.
I've been at 2.35 for about 2 months now. Not as early as you were, but that has been my number for a while. All right. Your general impressions now. After all of that, I had to get that off my chest, but I'd love to hear your general impressions about the call.
About the call, I thought it was fine. And it was good to hear Elon answer some of the questions. I didn't expect him to provide such a long answer to the question about, him wanting 25% voting control, but I actually really liked his answer to that.
I have to say, I hit it on the nose, almost word for word.
Uh, one thing I did say is like, I think it's possible that Elon is troubled by this ESG DEI, and
Of course he is.
he specifically spoke to these shareholder voting blocks in these groups. Yeah, I wasn't surprised to hear that, but Elon said it in different words.
Yeah, I think he clearly doesn't like the ISS groups.
Yeah. Tesla's not wanting to talk much about Gen 3. And we saw a video on Autoline where a consulting company basically studied the Gen 3. They put over 1,000 hours. I think it's over 10,000
over
hours.
100,000 engineering hours. Yeah.
Wow. And basically they figured out how Tesla was going to make the car station by station, and like from a first principles standpoint, it's like for this all to work, for it to be joined together at the end and all this stuff, how does Tesla have to do it station by station? And essentially they took stuff from that's out there about other teardowns, but it, slides from Investor Day that Tesla put out there, and Tesla saw this, and now they're like, and they've seen what other people are doing with the bot, and copying Tesla. So they might get more cagey, and especially with a compact car, if there's people who are okay having a bigger car, but would prefer to have the compact so they could pay less, you don't want them to know about it until you're making it, till you're producing it and it's going out the door. I don't think Tesla has any demand issues with a compact car. They don't need to announce it in advance.
Right.
Literally they could say, hey, we're making the compact, and they wouldn't even have to advertise it. They could put it on the website, and the hardcore people would buy out their first year of production, right away. So I think they may be a little more quiet about things. But Elon, does like to have his events to recruit.
And not only that, I think he just is like a little kid about this stuff. He wants to tell everybody,
Yeah.
I get it. I totally understand. So Al Root at Barron says that the bottom is 177. So do you think Al Root is right? Do you think it bounces off of 177? Do you think it could go lower? Where do you think we're going?
It's possible. I think the bottom will be like by Monday morning. Typically, you have these post earnings reactions, whether positive or negative, where you can have these 3-day runs or 2.5-day runs. And I think there's people who are just losing patience, and they want to sell. They haven't sold yet, and they're going to think about it over the weekend so they don't make an emotional decision. But like 10:30 in the morning is going to roll around Eastern on Monday morning, and they might puke and sell the stock wherever it is at any price. So it maybe that's the price in the next few days. I don't know. I think it makes sense for like an interim bottom that it should be in the next few days. Like it's the last 2-3 weeks have been pretty brutal for the stock.
No kidding.
It's been
Well,
3 weeks now. Yeah.
yeah, 3 weeks. Yeah. So according to Zacks, the Tesla's price to book ratio currently sitting at 12.19. That is where you take the total assets and the liabilities, preferred stock, and tangible assets. It is now at its lowest level since early 2020. And the last time Tesla's price to book ratio was this low, Tesla exploded from $35 to 400.
Mhm.
Thoughts?
Yeah. I think sentiment's really low. So like typically that's when you want to be looking to buy, not financial advice.
Right.
I am a financial advisor.
But you're not giving financial advice. Well,
That's
okay.
just typically what we see in our experience.
Right. Let's look at the general, economic situation and the markets for a minute.
Well, I want to talk
Oh,
Tesla for a
sure.
moment.
Go for it. Go for it.
I think the good news this week is Tesla V12. Omar got it. I don't know if it was like Sunday night. Yeah, I think it was Sunday night. So Omar's blog, he's been making videos on YouTube and sharing whole rides. I don't know if he's sharing every ride,
Right.
but it's doing some really impressive stuff. Really impressive stuff.
Parking to parking.
Yeah, parking spot to parking spot, curb to curb. Um, there's a 1 lane street where the car decided to park on the left side of the street.
Oh, interesting.
So it's a legal spot.
Yeah.
Um, you're just seeing the car act in a really appropriate way. His first drive, there were two big fire engines on the left, and then on the right before that was a fire chief, and they all had their lights on, and there was nobody walking around in the street, so it was legal to drive through. Then and the Tesla just cautiously drove through the 1 lane that was available. Um, if this was version 11, it would have been frozen in its tracks.
Uh-huh. Yeah.
Uh,
Yeah.
so there's a lot of new behaviors. There's a lot of intersections where Omar, every time it would do the wrong thing, whether there's some stop sign it would run every time or whatever, and now it's stopping. All these things is doing much better with lanes, like getting into the correct lane and at good times in general. So we're seeing a lot of progress and a lot of new behavior. Has me pretty excited. Now, not sure how it's going to do in other parts of America.
Yeah. Yeah. Yeah.
We'll,
Yeah.
we'll see about that, but like it looks to be a vastly improved, and like there was no reaction about that. It's like basically no one knows yet.
Yeah.
Like we know about it.
Right.
Um, thousands of Teslaonaires and hardcore Tesla bulls know about it, but the rest of the world doesn't know about it yet.
Yep, it's a fact. It's a fact. Yeah, it's pretty exciting. Absolutely. A lot of people in the community talk about the grandma test. Well,
Mhm.
I happen to be married to a grandma, and she's been using her FSD more and more because it's being,
Wow.
and that's still just version 11. But she was not using it, and she's been using it, and she says the only thing we have a very, very weird where we get on the freeway, where she gets on the freeway to go to she's a professor, and when she gets on the freeway to go over to the university, there are about 5 lane changes in a mile and a half. I mean, getting into traffic, and then you have to move over, and then there's choices. And I mean, it's really complex. And the car
Mhm.
has never been able to do it. So when it passes that test, she'll probably be ready to use it full time. But that's been one of the hard ones.
Yep. Yeah, I have
Okay.
a spot like that in my area. It did it once on one of the versions, but it never did it again.
Again.
And yeah, but here's the thing, it doesn't need to be perfect.
Right.
It needs to, we can't have safety critical interventions where you're intervening to prevent an accident.
Right. Yes.
So like that's the main thing. As long as you have that, then essentially it's ready. The next thing you need is where it's not like doing hard jarring maneuvers that would cause people who ride it who aren't hardcore like us
Right,
to be snake bitten about it and not want to ride it ever again.
right, right.
So those are the two things you want, but you definitely need a first one where there's no safety critical interventions.
Exactly.
Yeah, I'm curious how it does with those in my area. So we'll see.
Uh, So are you ready now to talk about the economy?
Let's do it.
All right. So I do have another quandary.
This is some good news.
Yeah, well, maybe you can help me with my quandary. Okay, we have got Goldilocks right now. Holy mackerel. The GDP came out today, beat. The PMI for both manufacturing and services beat. Inflation, in both of those cases, they have an inflation index that they use that's different than the CPI or the PCE. And in both cases, they were showing inflation going down.
Mhm.
And we got the PCE coming out tomorrow, and based on the GDP number today, it takes into consideration all the same information that's in the PCE. So you're able to kind of extrapolate from the GDP numbers to the PCE, looking like it's going to come in at 1.7 tomorrow, annual. So on the annual
On the inflation,
on the
on the
inflation run rate,
deflator.
yes, right, on the run rate.
Mhm.
So how can the Fed not lower the rates next week? I mean, they said they don't want to go below 2%. I'm really confused.
They're not going to go that early,
I know they're not. Why?
the market has already moved to a 50-50 in March.
I know.
So I said it would take longer. I'm really pleasantly surprised with this GDP number, 3.3% real. So like after you subtract inflation, so nominally, let's pretend it was 5,
Right.
and you subtract that 1.7 you were talking about, then you get 3.3. That's a really strong number. The Fed was expecting like a 1.5%
No.
growth in GDP. That's
By
kind
the
of
way,
what.
they're notoriously horrible for predicting GDP. I mean, you wonder why we use them for anything when they're as bad as they are at predicting GDP.
Yeah. So that was a good report. We didn't see recession. Um so yeah, things are running really good. Typically this is a time when recession tends to start. 18 months after yield curve inversion. You have all these other indicators, but you got this great report. Might be hard to keep up.
Well, I said multiple times on this show, starting 4 or 5 months ago, 6 months ago, that 5%, a 5% Treasury yield was not a big deal. That 6, 7% mortgage rates were not a big deal. You and I are old enough to know that those are, and knowledgeable enough to know that a 6% mortgage is the average over the last 100 years. So the actual it was the rate at which we got there that was kind of scary, but in general, people can adapt to these current interest rate levels. If they go down, that's obviously going to be a plus for Tesla. It'll be a plus for the economy, et cetera, but they're not horrible. And so therefore, it's not shocking to me that the economy has worked through it. In fact, last year I said there won't be a recession. I said that all year long. And this year, though, help me out on this one. I'm nervous a little bit. I'm at 50-50 right now on a recession.
Hmm.
Based on January and the stock market being a predictor 6 to 9 months out, I would say no chance, no how, no way, at least for the first half or first 3 quarters. But we're not all the way through January yet.
Hmm.
But the thing that I'm thinking is that the thing that could kill the recession, I mean, kill the economy, could be the Fed. And they don't need to if we're at 2%.
That's right. That's right.
Okay, so you're just gonna
Yeah,
go
it'll be curious to see how they change a language like in March. I don't expect much of a change in
even in language,
January.
even in
Yeah.
language. Wow.
They they tend to be a little
Late.
slightly trailing. A little late, yeah. It got dovish before people expected in November, and I think I don't think they'll be more dovish than they were in November, but we'll see.
So what do you think about the economy for the year? Do you think we stay above water all year, or do you think there's a chance we go underneath when we get into the third quarter, fourth quarter, where there's some pretty big numbers to beat?
Yeah, the numbers to beat in the third and fourth quarter are tough, and that one thing you're likely referring to is government spending really provided a boost in third and fourth quarter this past year. And government spending is supposed to be flat year over year in those quarters. So you won't get a boost from that. So yeah, maybe it starts a little later than thought. Yeah, I'm really surprised by these good numbers.
Yeah, me too. Me too. Now, on the other side of the coin, we did have outstanding housing numbers today, and we've had outstanding housing numbers for 2 months now. And my prediction has been, will continue to be, housing might be what saves us. We're only building 660,000 homes a year, and the high was 1 million. So we're still down a full third from where we probably need to be and should be in housing starts, or in housing units being made per year. If we boost housing by 30, 40, 50% next year, that would have a huge impact on the economy.
What do you think's preventing more housing from being built? Like, there's such a shortage. There's such a need for more homes.
Well, this is
What do you think the stumbling block is? Is it permitting and getting all the hookups going? What do you think it is?
so builders have to think 18 months, 24 months out. You know, they can't be making their, because I've seen it happen. Maybe you have too. I can remember back in the 60s. You don't remember back that far, but I can remember back in the 60s, and there were subdivisions that were built, half built, and then we went into that recession, and all of a sudden you've got sticks, and there's no walls and there's no roofs, and so they can't make that mistake. And so they have to really think it out long term. Well, when you've got interest rates going like this, and you have to go out and borrow money in order to build those homes, you're not going to go out and borrow the money to build those homes, paying that higher rate, and then not be able to sell them because the rates are at 9% or 8% or whatever.
Yeah.
So I think that they were just really cautious last year, and they're proving right now that they were right, because up till this month, they're having to give real incentives to get people to move in. But there's a big shortage, and now that interest rates have come down, and it looks like they're going to stay down long term, I think the builders will come in pretty good numbers. That's my guess.
Yeah, I guess if you're a renter, you're in a great position to be in. I was talking with a client where if they were going to buy a house, the rent would essentially go up by 50%. But they were able to renegotiate and get what they wanted as far as the terms of where they're at. And it'd be the same too if you're a homeowner with a smaller home than you're really wanting right now, but let's say you're at 3% on your mortgage.
Yeah.
It's got to be really hard to move up to like a 7% mortgage or wherever it is today.
Yeah, it's under 7 now. It's in the 6s. So that's the good news. And I think we'll see. Of course, I think that'll come down. If it gets down into the 5s, it's Katie bar the door. The housing will be going great.
Yeah.
But to your point, rents are actually going down. They've been very level for months and months and months, but rents are now actually going into negative territory. So that's huge in terms of, again, all these indices, is that if rent goes into negative territory. Well, Bradford, what do you think Tesla's doing in the after hours? Sorry.
What's that? How much?
It's down another 17 cents. So I would call that
unchanged.
Unchanged. Yeah. Okay. Now let's go take a look at the bonds, because the bonds are still controlling. Do you agree with me on that? Bonds are controlling.
I think options are controlling the Tesla stock, but
well, options controlling Tesla, and the bonds are controlling the whole market. So
yeah.
Okay, so the 10-year is down 2, actually 1.8 basis points in the pre-market. The rest of the long terms are also down even more than that. The short terms, though, are still up. So the inversion can, well, okay, the 2-year conversion, no, the inversion is still about the same as it was, all this week. Let me see what that is, by the way. I haven't looked in a while. 4.3 minus 4.1. See, you're right. That inversion is closing. It's down to 2.2. So that's way down from the 50. It was 50 basis points. Now it's 20 basis points, 22 basis points. So that's a pretty good close. Now they do say that when that reinverts, that's when the recession starts. That's
Okay.
according to the pundits, the ones that follow this stuff. All right, let's look at oil next.
So how close are we to not reinverting?
22 basis points.
Okay.
22 basis points. And it was 50.
Okay.
It's closing in. I'm sorry, oil. Oil is down a little bit in the after hours. It bounced all the way up to 77 today. Turns out there was a lot of the inventories did reduce in the United States on oil because of the cold snap. And so now we're seeing a little bit of a bounce based on that. Not a big one, obviously, but some kind of a bounce. And the difference between the Texas Intermediate and Brent is still $5, which is a little less than it was at the worst case because of the Red Sea, but not down to 3, which is its kind of normal range there. And natural gas actually up a little bit in the after hours, but natural gas has been beaten down so badly, I don't know if it can go any lower.
What's the latest on the Red Sea and Suez Canal? We're hearing about some kind of truce, but there's no truce yet, I think. I'm not like wired into CNN right now, but what have you heard since the last time we talked about the Red Sea, Suez Canal? Anything
good? Since the last time we talked, there was the U.S. has been bombing the heck out of them, out of the Houthis, and also in conversations with Iran about this is not good. But I had not even heard, to your point, I had not even heard anything about a truce.
I don't know if this was last week or not, but some vessels have been disclaiming or saying they're not doing business with Israel.
Oh, I see.
So then they're sailing through.
Yeah.
Apparently they don't get missiles fired at them.
The Houthis must. I don't know what these guys are thinking. Maybe they're not thinking. That could be the whole answer. But they almost none of their missiles or none of their drones ever do any damage. And then when they do damage, it's kind of like somebody hit them with a little pea shooter, and the ships just keep going. And then in turn, the United States and Britain and France and everybody are just bombing the crud out of them. I'm not sure this is really all that helpful to their cause. I don't know. Seems fruitless. But no, the last I heard was Iran saying they will be continuing to do this until Israel gets out of Gaza. And that ain't going to happen until they're done. Yeah. So gold, even sitting at 2019, kind of in the lower part of the range of where it's been, was up to 2070, but around there. Copper down in the after hours. It's been up though the last couple of days, so not so shocking. Also, the dollar's been up. So the dollar has been up, but the commodities have also been up. And now you would, obviously expect commodities potentially to go down when you have the dollar up. But copper, at least in the pre-market right now, is down for the first time in a couple of days.
What about Bitcoin?
Well, there you go. That's that's the next to the last thing we talk about. So Bitcoin is still under 40. It's at 39,888.
Okay.
So been reading a couple of articles. I don't care about it yet in terms of philosophy, but I do watch everything in terms of the same kind of metrics and same kind of how things move, and it seems as if this is a sell on the news, and there hasn't been anything to stimulate a new, except for the halving, I guess, which takes place in May or something. Yeah.
Yeah.
All right. Pre-market on the Dow is down 89. So it's been up 5 days, 6 days in a row, something like that, 7,
Mhm.
a bunch of days in a row. And now down 88, which is 0.23. S&P down. It's also been up many days in a row, down, but only 10, and that's 0.21%. And then NASDAQ down 97, it's down 0.55. So that's a pretty big move for the pre-market on all three of those. But man, they've been stretching way up. So it's probably time for a breather. Okay.
Oh.
All right. Okay. Tesla down 40 cents now. I always go back to Tesla at the end.
Mhm.
Any last thoughts about any of these things, Bradford?
I did a rather unscientific poll on X today.
Okay.
I wrote my weekly poll, are you selling Tesla today? And who knows if people are answering this
Honestly.
truthfully. 5% were no, I don't own Tesla. 80% were no, and I own Tesla. 10% said yes, and 5.5% said yes, and I'm buying Nvidia.
And they're buying NVIDIA.
Yeah.
I think I saw somebody else do a similar poll, and maybe I just misread yours. Maybe I was just being optimistic that,
Mhm.
that people were buying more Tesla. Did you see anything like that out there? I don't know. Maybe that was.
Well, that would be that would go under no, and I own Tesla. That
I see.
you're buying more.
I see. Okay.
Yeah.
Yeah. So interesting. They're buying NVIDIA. So sell at the bottom and buy at the top. That sounds like bad
Yeah.
investment advice to me. Although NVIDIA, I guess, could have a little more run. You're a NVIDIA expert, right? So do you think it has
I'm
more?
about expert, but yeah, I it's been going. We haven't trimmed it again recently yet. I think it could easily be $1,000 a share. Not financial advice.
Yes.
Just based off of where we think the earnings are going to be for this year, but also after they get their capacity doubled by TSMC late this year. Like, so you take the earnings this year and then you realize, oh, they're going to double from here, potentially.
Yes.
That's provided that they don't have to lower prices when they expand capacity. I think, based off of what we heard from Tesla, and I think it was Meta or Microsoft basically went from an order like 3 months ago, their order from NVIDIA was 150,000 of these
Yes.
H100s. Now they're at 350,000 is the order. Their order went up over 100% in just 3 months from one company.
It's tough to be NVIDIA, isn't it? It's just really tough right now to be NVIDIA.
Yeah.
I need a company like that. That's what I had a company that grew 400% in 1 year, quadrupled in 1 year. That was my
Mhm.
manufacturing company. I think we went from like 1.1 to 4.4 million or something like that.
Wow.
And we literally had a meeting of all hands on deck. And we said, are you guys wanting to do that again next year? And everybody's like, no. So I wonder how NVIDIA, there may be people within the organization that are going, this is too crazy. We just can't even handle it. Because there's a lot of turmoil. You create a lot of shocking, surprising things within an organization when you're growing like that you just, things like space and renting more space or building more buildings or running out of that one component that you didn't think you'd run out of, but then all of a sudden you did. I mean, there's just so many things that can happen.
Yeah, NVIDIA is capital light, but they are dependent on manufacturers. I think Jensen Huang said something like famously like that the H100 has 30,000 parts. That's not different parts, but
Yeah.
he said it had 30,000 parts in it. Yeah, so yeah, things could potentially slow down. They are pretty light in their assets, so essentially they design it, they provide software, and then other people make it and are able to sell it under their own brand, and NVIDIA makes a royalty from that.
Right. Yeah, not bad. Not bad at all.
On their last earnings call, Jensen Huang mentioned that NVIDIA basically has this side business where they're like holding back some of the supply of H100s.
Oh, yeah.
And so if you want to rent them, you can't buy them from NVIDIA, but if you can rent them, you have to pay like a hefty premium for that. Yeah, so it's kind of nutty right now. It is
Oh,
nutty.
actually, we were joking on who was I with when we had this? Must have been Larry, I think, Goldberg. We were talking about or was it Brian White or Wang? I can't remember who it was. Oh, it was probably Brian Wang. And we've been talking for a long time about the problem of maybe China invading Taiwan.
Mhm.
And I realize, of course, that all 7 of the Magnificent Seven depend on NVIDIA and
TSMC.
TSMC. They all depend on that company for their survival. So I'm thinking they won't even, if China made looking like they were going to invade Taiwan, it wouldn't be the US Army that would come to their defense. It would be the armies of those 7 companies. They would hire all kinds of people to just go attack the Chinese.
Yeah, it could happen.
They'd get all their own drones and start attacking the ships as they come in. Anyway, a horrible thought to contemplate as we end Good News Thursday. But
hey, we're good at that sometimes.
that's right.
But V12 is great, and I'm curious when more people find out about that, and maybe that moment begins to happen when Elon said in the coming weeks.
In the
So
coming weeks, yes.
we don't know if that's April or if that's February, hopefully, but when that starts to go out to more cars, there's people on Wall Street, even Tony Sakanagi, the guy with the, I don't know if he's at $150 or
Something
wherever
like that.
on his
Yeah.
price target, but even he has one. So
Yes.
his wife drives it, but he does have one, and so they'll see what the software is like when that update comes out.
Yeah.
That might change things a little bit, but I'm not holding my breath for Wall Street.
No. Okay, Bradford, as always, delightful to have you on the Thursday night Good News Tesla network here. And if we don't talk to you or see you before, we'll do this again next Thursday.
Sounds good.
All right. And to all of you out there, it's been great talking to you.